Hello, everyone. Welcome to our webinar on setting the pace of sustainability reporting. I am Siu Yin, your host for today. And before we start, I would like to introduce our speakers for today. We have Wan Yang, our BSI Head of Sustainability Solution for APAC from BSI. And we also have Dr. Alinette Adige, Head for ASEAN Regional Hub from Global Reporting Initiative, GRI. And before we start, we would like to also share a message from our ASEAN Managing Director, Mr. Emmanuel Heath. And right after his message, we will hand over to the speakers directly. Thank you very much.
Good afternoon. Welcome to our webinar on setting the pace for ESG reporting. Due to climate change, our stakeholders from investors to consumers are now more environmentally conscious. They are demanding more transparency from organizations on their policies supporting environmental, social, and overall governance values. As a corporate certified training partner, BSI, in collaborations with the Global Reporting Initiative's GRI, is bringing this webinar to you to share the insights on the importance and elements of the ESG reporting process as per the GRI standards. I hope you will find this webinar useful. I will now hand you over to my colleague, Wan Yang, and our guest speaker, Dr. Alinette Adige from GRI. Please enjoy and do not hesitate to ask questions. Thank you.
Good afternoon, everyone. It's a great pleasure to speak on behalf of British Standards Institution on the topic of ESG reporting and GRI standards. My name is Wan Yang. I'm based in Beijing, China, and I'm the APAC, Asia Pacific Sustainability Head at BSI. So for today, there are 4 parts of my presentation. In the first part, I will give you a little sense of idea about who is BSI, our a short history of our organization. In the second part, I will share with you some very fundamental concepts about sustainability reporting, right? And in the third part, we'll be talking about the trend, the global market trend we have observed. We want to share it with you. And last part, I will share with you, our ESG solution. Okay. So for the first part, I will give you a little introduction about ourselves, about BSI. I don't know whether anyone knows about this bridge. Yeah, it's the Tower Bridge in London, right? So the designer of this bridge, his name is Sir John Wolfe-Barry. So BSI was founded by the designer of London Tower Bridge, Sir John Wolfe-Barry. He's the famous civil engineer who not only just designed London Tower Bridge, but also oversaw the whole construction of this bridge about more than 100 years ago. He played a prominent role in the development of industry's standardization. Okay, he firstly urged to form a committee to focus on standards for iron and steel, because for this bridge, tens of thousands of tons of iron steels were used. But at that time, he found, all those iron steel and raw materials, they have different size, different, quality. They are not consistent in many ways. So he felt it's very important to create certain standards. So that's why, he founded BSI. The BSI is the first national standard body in the world. It is also the founding member of International Standard Organization. BSI was founded in 1901 So this is the tram track gauge in 1901. So BSI, that was the first standard BSI launched. That was more than 120 years ago. Okay. And here are some statistics, some numbers about BSI. We have 87 offices in 31 countries, housing more than 5,500 colleagues. And also we have more than 84,000 clients in 193 countries. Okay, so our clients not only include top brands or multinational companies, but we have a lot of partners, clients who are small and medium-sized enterprises. Okay, so for BSI, I think we are not just the certification organization, because we provide verification and certification services to our clients. I think the special thing about BSI is we are also developing many standards. For example, in the area of, okay, so here are some examples. BSI is the source of international standards. Those are all the standards. For example, like very famous ISO 9001. I think a lot of people, most of the people here, I guess, know this standard. This is quality management system. Okay, so this standard was originally developed by BSI. The first, at that time, it was a British standard. It's called BS 5750. And later, it was upgraded into the ISO standard. Okay. There are many other standards. For example, the only available standard, international standard for carbon neutrality, the last one, that was past 2060. It will probably be upgraded to ISO standard at 14,068 next year, in the year of 2024. But this carbon neutral standard was originally developed by BSI more than 10 years ago. So BSI play a very important role in creating all those standards, right? And also I think we are forward looking. We created this carbon neutral standard more than 10 years ago. At that time, very few people really understood what carbon neutrality really means. Okay. In the next section, I will very quickly just to go through some basic fundamental concepts about ESG, sustainability reporting. So an ESG report, by definition, or sustainability report, I think they are the same thing, right? It's a report published by a company or organization about environmental, social, and governance. ESG. ESG stands for environmental, social, and governance. Okay. It enables the company to be more transparent about the risks and opportunities it faces. It's a communication tool that plays an important role in convincing skeptical observers that the company's actions are sincere. I think the audience could be the investors, for example, the customer, their customers, or the general public, or the regulators, government agencies, right? So here give you some clue about the history, about ESG, about sustainability reporting. So it started from ethical investment. Ethical investment was the earliest responsible investment. Okay, many of its principles are, sort of to some extent related to religions, such as prohibition of investing in tobacco, weapon, gambling, so on and so forth. Since 1990s until 2000, CSR has become popular. CSR is corporate social responsibility. Okay, SRI stands for social responsible investment. socially responsible investment. Okay, so when CSR became popular, at the same time, people began to talk about SRI, socially responsible investment. And in mid 2000s, starting from UNEP and UNPRI, the conception of ESG and sustainability were introduced and has become the mainstream nowadays. All right. So ethical investment is mainly driven by social values, such as the religious value, right? CSR and SRI are driven by investors' preferences, while ESG has more and more become a must instead of a choice, especially for top brands. In future, climate change. I think climate change is very hot. Everybody is talking about climate change. Climate change will attract special attention from investors and the general public. So TCFD stands for Task Force for Climate-Related Financial Disclosure, which is a climate data disclosure framework. Okay, some more advanced companies begin to disclose their sustainability performance according to, for example, SDG impact, SDG standards. Okay, so I think this will be the future. That will be the future trend. And you can see from the whole history of socially responsible investment or ESG, all those conceptions, they all started from investment, from the business perspective. Okay, so here I listed, this is a chart from GRI's certified training material. So here I listed some values of sustainability reporting. Okay, I don't want to read them all, but for example, like attract capital, like set vision and strategy, like how help you to manage risks. Those are all important values for sustainability reporting. But when we talk to the senior managers in your company, how can you convince your boss, your CEO, to invest more into improving your ESG performance, or at least disclose more ESG data to the general public? I think those three are the main audience we need to address in terms of ESG disclosure. The first one is your investor, right? So I think let's be very practical. If a company is fine or polluting the environment, their stock price will probably go down, and the investors will lose money, right? So investors are keen to understand their investees' ESG performance. Investors can really make a difference, to the invested business entities, right? Let me give you an example. Last April, when Tesla, was given a low score by S&P, by Standard & Poor's, and then, kicked out of the S&P ESG index. I think Tesla's owner, Elon Musk, he was very angry. I think he wrote a couple of tweets, to argue, right? So why he was angry? I think one of the reasons is at the very day Tesla was kicked out of the ESG index of S&P, the stock price of Tesla went down, and Tesla lost tens of billions of US dollars just that day. So you see, ESG performance really have an influence on the value of your company, on the economic benefits of the investor. The other thing, the other ESG performance is your buyer. You see, more and more, your customer choice can also make a difference. If the company is a supplier, if your company is a supplier of a brand or a lot of multinational companies have their sustainability commitment. So the company needs to care about their buyers' requirement. Otherwise, they will be removed from the suppliers list, right? And the last thing, I think, it's very self-explanatory. Regulators like the SEC, sometimes they have requirements for the publicly listed company, right? So every company needs to comply with the government regulations and laws, right? So those, I think, are the three main drivers for your company to embrace ESG. And here is a short description about the ecosystem of sustainability reporting. We have top brands and listed companies, for example, like those multinational companies. They are the ones who need to improve or promote ESG performance in their company, right? And we also have standard developers like GRI, right? So GRI is a standard developer. And also we have rating agencies like the example I just raised, S&P, MSCI, those are all CDP, right? Those are all rating agencies. They give score to all those companies. And regulators like Hong Kong Stock Exchange, Singapore, Stock Exchange Committee, Singapore, so on and so forth. And ESG report assurance, that's BSI. At BSI, we provide assurance to your ESG reporting, okay? And also we have ESG consulting firms. Basically, they give consulting services to their clients. So you see, all those are important players in the universe of ESG, because ESG is, I think it's a universe. It contains a lot of different, players and also different topics in this area. And section number 3, I will share with you very quickly my observation of the global trends for ESG reporting. And so you see, the trend number 1, I think there are stricter requirements from regulators, right? I observed Singapore, the latest version of ESG reporting guide was effective since last year. And also all the publicly listed company must release their ESG reports for its financial year, right? The Philippines, I think, also starting from this year, the publicly listed companies are required. It's mandatory for ESG report. Malaysia, the same, right? Malaysia adopted a phased approach, but has set a very high bar for ESG reporting. Like other countries, like Indonesia, also have similar requirements. Thailand, Vietnam, right? So you see, the overall trend is we have stricter requirements from the government, from the regulators. Here is the top brands. They are publishing ESG reports. This is the chart I took from a report. So you see G250, which refers to the world's 250 top 250 companies by revenue. Okay, so you see, in the year of 2020, 96 of the top biggest companies in the world, they publish ESG report. N100 refers to the worldwide sample of 5,200 companies. It comprises the top 100 companies by revenue in each of the 52 countries. I think in ASEAN countries, the ASEAN countries are all included in the 52 countries. So which means 80% of the biggest 100 companies in your country, they release their ESG report in the year of 2020. So the trend is top brands, especially bigger companies, they are, publishing their ESG reports nowadays. So Asia Pacific grows very quickly. Versus 2017, we observed a 6% growth in the Asia Pacific. Now, 84% of the N100 companies in the Asia Pacific publish their ESG reports. And here you see, this is another chart for the Asia Pacific, like Japan, Malaysia, and like Taiwan, like India, all those Asia Pacific countries are releasing. For Malaysia, the reporting rate is very high. It's very high. 99%, almost 100%, 99% of the top companies, top 100 companies release ESG report nowadays. And this is some numbers about third-party assurance, because third-party assurance will give approval to your ESG disclosure, data disclosure. For example, like greenhouse gas, you claim you produced, for example, 10,000 tons of greenhouse gas, but you need third-party verification for that number. So third-party assurance, we think, is also adding value or adding credibility to a ESG report. Nowadays, by the year of 2020, 71% of top brands, top 250 companies in the world are using third-party assurance for their ESG report. GRI is the mainstream. So today we will spend more time on GRI standards. You see, GRI stands, nowadays, around like 75% of the top companies in the world are using GRI standards instead of others. Okay, even for others like stock exchange guidelines, many of them actually, learned some principles or even standards from GRI standards. So nowadays, GRI standards is very universal. It has been widely used by the companies and even by the regulators. So last, quickly, I will give you some ideas about BSI's ESG solution. So I think where you could, if your company, your senior management in your company, they ask you, how will you, suggest you should, you should do to start your journey of ESG reporting? I would suggest it will start from the GRI certified training, ESG training, right? So you need to build the basic, very fundamental knowledge about ESG. I think the GRI certified ESG training, that will give you a lot of very good, knowledge and build the foundation for you to start the journey of ESG reporting. So this, are some very basic, information about the GRI training. So we are the GRI certified training partner in APAC. We have 2 days for now, and probably in 6 months, we'll launch 2+1 days. So that will be 3 days in 6 months. So upon completion of this course, participants will be able to, you will be able to discuss the fundamentals. You will understand the standards. You can, conduct materiality assessments and stakeholder engagement. And also you can link the sustainability report to other sustainability standards. For example, the stock exchange guidelines, right? So, and who should attend? For example, in your company, your EHS manager, your sustainability director, your colleagues responsible for climate change or work safety, for example, and also personnel from HR, right? Because we have in the GRI standards, we have many standards related to the employees, right? To the human capital management. And your corporate communications, marketing, procurement, operations colleague, they can also come. And representatives from legal and statutory bodies, right? And also consultants, assessors, NGOs, and even postgraduate students. We all welcome them all to participate in our GRI certified training. So after completion, the participants will be awarded an internationally recognized BSI Training Academy certificate. So should you have questions about the training, I think after this webinar, I think you can reach out to my colleagues. They can provide more detailed information about the training itself, about the certificate, about the arrangement of the training workshops. So starting from GRI training at BSI, we can also provide other services related to your ESG journey. For example, like capacity building. So if you don't have a sustainability strategy, we can work together with you and provide training or capacity building for you to develop your own sustainability strategy. And gap analysis, if you found you don't have verification for your greenhouse gas, you haven't calculated your greenhouse gas emission, we are here to help. And last, independent verification. Not only for the ESG report itself, we can provide assurance, but also we provide assurance for a lot of other things like GHG, like environment, energy, right? Supply chain, for example. So we are basically, BSI is a standard organization. Why standard matters? So why should we care about standards and certification? I think because standards are essentially, standards are summaries of best practices, which have been proved effective, proved successful in our previous practice by other people. So that's our standard, right? So standards are the summary of best practices. So if you adopt standards, and if you go through the standard certification, it will help you to improve not only your credibility, but also improve the productivity of your company, improve the performance of your employees, for example, and need for compliance as well. Government sets mandatory directives, right? You need to comply with, and buyer's requirement. So some international buyers require you to get verified or certified against certain standards. I think the obvious example is 9001, right? And sometimes the buyers require you to go through some sustainability standard certification, right? And investors demand. Your investors have, of course, especially investors from Europe, from the US market, they will have demands, requirements for you to get verified in order to avoid risk. And market access, if you want to access to a more advanced market, for example, like a European Union, you are asked to go through some certain certification of your products. Okay, so under ESG, there are all different kinds of standards. So we invite all of you to go together with us for the journey of ESG. I think BSI can add value to you by supporting you with standards, with verification and certification. That's the end of my presentation. I think next we will have our distinguished speaker from GRI. She will give you more details of GRI, and also she will share her perspective of global trend. Thank you so much.
Thank you very much, Wan Yang. While I am trying to load my presentation, I would just like to say good afternoon, good morning, good evening, wherever you're logging in from, because from what I understand, we have participants from all over the world. And I see some familiar names also in the audience. So thank you for joining us today. So I am Ali. I'm Ali Adige. I am the head of GRI's ASEAN Regional Hub, which is based in Singapore. So today I'll be talking about a couple of things. First is just a brief overview of the GRI standards, who we are as an organization. So earlier, Wan Yang went through the history of corporate sustainability, corporate responsibility in his slides. So GRI, we were created in 1997. A lot of you probably were just, very young then. But at the time, in the late 90s, of course, companies were only required to submit financial reports. That was the common practice. But for those who were already alive and breathing in the 70s and the 80s and the 90s, we would remember a lot of corporate scandals, corporate misbehaviors, all over the world. And just before GRI was created, the biggest one was the Exxon Valdez oil spill off the coast of Alaska, which really caused, a furor all over the world. And our creator, we were created in the US by our founders, Ceres, and UNEP FI. So they thought that it's high time that we make companies responsible for their non-financial impact. So GRI, we were created in 1997. We celebrated our 25th anniversary just last year. So we are an independent international organization providing the global common language for corporate transparency. So what we basically do is we create the GRI standards, which companies can use to report on their environmental, social, and economic impacts, collectively their sustainability impacts. And we delivered GRI standards as shared by Wan Yang. This is GRI standards remain and continue to be the most widely used impact reporting standards in the world by the largest companies, even the top 100 companies in several jurisdictions. So we developed it and we provide it for free to everyone who wants to use it. They can download it for free on our website. But if you want a deep dive into how to use the GRI standards, we do have certified training partners such as BSI to help you through the process of sustainability reporting using the GRI standards. And at this point, I would like, of course, to thank BSI for inviting me to speak at this webinar. And of course, we welcome BSI because BSI is one of our newest certified training partners. So as you can see in your screen, we have more than 100 certified training partners in the world. GRI is a small nonprofit international nonprofit organization based in Amsterdam. So we need all the help we can in building more capacity on sustainability reporting, especially at this time where we see there is strong demand and there's a strong awareness and demand for sustainability action. Probably some of you have read a recent IPCC report. I think it was issued like 2 weeks ago, and the prospects are not so good. So that's why sustainability reporting is very important, because it's a proof that the company is adopting sustainability measures in order to protect, the environment, economy, and the society. So according to the IPCC report, we're actually on track to a 1.5 degree increase in temperature. And this is the ceiling that we have to achieve. Otherwise, beyond 1.5 degrees, it's a dangerous zone for the planet. So sustainability reporting is just one tool for us to be able to, maintain this planet livable, to make this planet livable. But there are other organizations like BSI who sets standards by which companies should behave, should act, which covers environmental and other social issues. So going back, as I said, we're the most widely used reporting standards out there. Wanyang also touched on it briefly about regulators referring to GRI standards. So from our last, there are now 168 policies in 67 countries that reference to or require the GRI standards. And in terms of download, we see it as a sign of increasing interest and hopefully action to sustainability reporting. So in 2021, we saw more than 500,000 download on the standards. And I think last year we peaked to 1 million. And very interestingly, half of those downloads were not in the English language. The GRI standards is translated in 13 languages, and we continue to increase the translations to other languages as their requests come in. Okay, so this is how the GRI standards look like. So for those of you who intend to enroll or take the course on GRI standards training with BSI, they will go through with you on the details of the GRI standards, but this is just an overview of how the GRI standards look like. So it's modular in nature. So we have the universal standards, which basically that lays down the principle on how to use the other modules in the GRI standards. So GRI 1 lays down the requirements and principles for using the GRI standards. GRI 2, disclosures about the reporting organization. So we hear about E, S, and G. G is the governance part, and you can find all those governance disclosures on GRI 2. And GRI 3 is a guide on how to use the sector standards and the topic standards. Sector standards, we had sector standards under G4, we're now at GRI standards. So the idea of bringing back the sector standards is that so that it's aligned with the new GRI standards. And the purpose of this is to identify what are the most material topics that companies should and can report on depending on the industry or sector where they belong. So far we've released like around 2 or 3 sector standards. So that's coal, oil and gas, and agriculture, aquaculture, and fisheries sector. So we started with this because these are the 3 sectors or industries that have the most GHG emission. And then, of course, the topic standards. So under the topic standards, this is where you will find the different topics to report on specific information to your material topics in terms of the environment, economy, and society. Okay, so the GRI standards is a very dynamic document. We update it regularly to ensure that it is attuned to the needs and developments of the time. So just in 2021, we have updated the universal standards. What the main difference is from the 2016 to 2021 is that we have made human rights as a centerpiece of the universal standards because as you know, there's so much awareness now on an environmental, but the economy, environment, society, and the governance part are all interrelated. And when we do not take care of the economy, and the environment, at the end of the day, it's human beings that will be affected. So we put it front and center of the universal standards. So these are the key changes in the universal standards. Before we have core and comprehensive, now we have in accordance to, and then we also introduce due diligence in the key concepts. And then on reporting principles, we focus on quality and presentation of information. So I will not go through this into detail because if you enroll GRI standards training with BSI, you will have more information to digest. When I talk about in accordance requirements, for you to say that you are actually producing a GRI report, we have certain requirements. So these are the 9 requirements that you should comply with for you to claim that you are actually reporting in accordance to the GRI standards. The second main change, the second point of changes in the universal standards is that there are now new disclosures for policy commitments for responsible business conduct, which include respect for human rights and due diligence, and how these commitments are embedded in the organization. So basically, now in the revised universal standards, we also put a lot of emphasis on the role of the highest governance body in sustainability and driving corporate sustainability, because, you know, we all know that nothing gets done if it doesn't come from the top, right? So that's why with the revised universal standards, we put more onus on the highest governance body, which is the board and the management team, to take the lead in corporate sustainability. And then there are also revised disclosures for organizations to provide information about their reporting practices, activities and workers, governance, strategy, policies, and practices, and their stakeholder engagement. And then another key change in the universal standards is now we have a revised approach to materiality that incorporates the concept of due diligence, with the new guidance to determine material topics and revised disclosures for reporting. So we have prescribed a process to determine your material topics. What are those lists of material topics, and how do you manage each of your material topic? Okay, this is just a simple infographic of what are the key changes in the universal standards. For if there are any of you who have coming from a company that used to report on the 2016 universal standards, and you want to transition to the 2021, I think this is a good guide on what are the key changes. Now, talking about the ESG landscape, for those of you who are closely following the sustainability ESG landscape, I think it's quite common to be confused over this alphabet soup of sustainability reporting, sustainability frameworks, and alphabet soup of sustainability frameworks and rankers and raters. So there was a discussion that there is an alphabet soup in terms of reporting standards, and we are trying to debunk that in every engagement that we have. There is no alphabet soup in the reporting standards game. Okay, we talk about reporting standards right now. There are just two: GRI standards, which is the impact reporting part. When I say impact reporting, that is the impact of the organization to the economy, environment, and society. So that's inwards looking in. As a business, your operations, how does it impact the economy, environment, and society? Now we have the ISSB, which was created like 2-3 years ago during the pandemic. They are looking at financial materiality. And this is the outside looking in. Now, how do those sustainability issues or risks impact the financial position of the company? Because, of course, we have to make sure that while we, of course, promote sustainability among companies, also companies have to be profitable as well. And in terms of, so GRI, impact reporting, ISSB, financial materiality. Now, under ISSB, so ISSB, for those who are not aware, it is supported by IFRS, and IFRS is supported by ISB and FASB. So you say, Ali, there's no alphabet soup, but how, there's other two as well. Well, the European Union issued the ESRS in November, which is the European Sustainability Reporting Standards, which is not a new set of standards. They basically married the GRI and the ISSB, meaning for companies that are doing business in the European Union, they have to report both on impact reporting and financial materiality. So you don't have to choose. SEC, which is a regulator, the US SEC, they are also in the midst of formulating their own standards on climate reporting, and probably more to come. But I think these climate standards that they will issue would probably be consistent to the existing climate standards, such as the GHG protocol. Now, in terms of framework and the framework developers, there is an alphabet soup there. How does framework and standard differ? As you can see in your screen, framework is about the set of principles and guidance for how information is structured. Whereas standards, it's more of the detailed requirements of what should be reported on each topic. I think to put it simply, to make it more understandable to everyone, this is an example I learned from my CEO recently. Let's think about tax, right? So each jurisdiction would have a tax law. So tax law would be equivalent to the framework. Now, all of us have to file a tax return to our tax authorities, and we have to fill out a form. And that tax form asks very specific questions. So that would be the equivalent of standards. Okay. And in terms of rankers and raters, that's also where we see a lot of alphabet soup. You see all these letters there, and so the role of rankers and raters is, of course, they rank companies based on their financial, and a lot of them are also now looking into sustainability performance. Now the thing is here, I understand, and I've heard this feedback a lot of times. Companies are also very confused because their ratings would change depending on whom they approach. It's because each of these rankers and raters would have a different definition of sustainability performance. Like the example given by Wan Yang earlier about Tesla, right? Because if you think about it, Tesla, the business model is sustainable because it's, renewable energy, right? But in terms of the S and the G, Tesla is quite notorious in having a bad record in terms of the S and the G aspect. So how is sustainability performance really defined, right? Is it the business model or the S or the G, or do they weigh it equally? How do they weigh it equally? Does it one balance the other? I cannot answer that question. That is a question for the rankers and raters. And right now, if you ask me, then why don't they just have a standardized? Because we're talking about standards, right? Why don't they have a standardized way of rating companies? Well, the thing is, they're not regulated. So they can very well come up with their own way of ranking and rating companies. So this is just another explanation of the previous slide in terms of reporting standards. As I said, there's no alphabet soup, and the reporting standards are actually complementary to each other, right? So it's not a matter of should I just report on financial materiality or impact reporting. Both are equally important. Next, this is just a visual representation of double materiality. So as I said, ESRS is now requiring double materiality. So this is the double materiality. Financial materiality is ISSB. Impact materiality is GRI standards. So simply put, financial materiality, outside looking in. How does your sustainability risks or impacts affect the financial aspect of the company? And then impact materiality, which is GRI, inside looking out, meaning how does your business operations impact the environment, society, and the economy? Okay, so this is just a more detailed differentiation of the GRI, ESRS, and ISSB. So I put here the ESRS because, as I said, it married GRI and ISSB together. Now you may ask, Ali, we're in Southeast Asia. How does the ESRS, how is it relevant to me? It is relevant to you if you are working with European companies, because those that are working with the supply chain of large European companies will eventually be required to issue a sustainability report. So that is why it's important to you. And we all know that in Southeast Asia, they call it the world's factory, right? So a lot of the companies here are doing business or supplying to large companies in the Northern Hemisphere. So again, I will not go to this into detail. This is just a more detailed explanation on how the GRI and the ESRS are complementary to each other. So basically, and then just for added information, the European Sustainability Reporting Standards, GRI helped in the construction of those standards. So it is complementary and interoperable. So meaning if you're already reporting using the GRI standards and you're working with a European company, you are compliant already with the ESRS. Now, but if you're not doing financial materiality reporting, then you can use the ISSB standards, or I think ESRS in itself also included financial materiality standards in there. I am almost done, I think, yeah. And this is just an example of how a company is reporting on the different alphabet soup of frameworks and also the different reporting standards. This is probably from those of you who are from Singapore. CDL is one of the earliest reporters, not just in Singapore, but in Southeast Asia. So I think this report was just released yesterday, and this is a very good representation on how to report on all of the different frameworks and standards out there. But for those of you who are new in reporting, you might think this is just too much. This is aspirational because even CDL would tell companies that it took them a long time to get to this stage. They started reporting in the late 90s or early 2000. So, but if you're a beginner reporter, it's always best to start with GRI standards because we cover it's the most comprehensive sustainability reporting standards. We cover governance, economy, environment, and the society. And I think that is the last of my slide. Over to you, Shireen.
Thank you, Dr. Elinette. We received a lot of questions, and I'm glad that some have been answered by Wan Yang online. Thank you very much. We may not be able to go through all, but I'll pick a few. I think one of the questions I received is around sustainability report. Can it be externally assured if the company only reports in reference to GRI but not in accordance to GRI?
Okay, the question of assurance first. Okay, external assurance right now is not mandated in the region, but under the ESRS, it will be required. It is required. So if you're doing business with them, then eventually you would have to get your reports required. But with my discussions here in Southeast Asia with the regulators, they are looking at it, but they are trying to not to rush the market. Because if they require an assurance requirement, they also have to make sure that the market is prepared, right? And there's not a lot of assurance providers, and those that do provide assurance, they also have different ways of assuring, right? So of course, it's good if companies have their reports assured. But as I said, here in Southeast Asia, we're not yet there. Now, on the question of the GRI standards, there was a report by IFAC that was released, I think, a month ago, which showed that majority of those companies that voluntarily report on the GRI standards take the next level of voluntarily getting their reports assured. And a lot of those companies are from Singapore as well. Now, of course, I would think because to claim that your report is in accordance to GRI standards, under the 2021 revised universal standards, you have to meet the 9 requirements. Now, if you submit your report and it's not in accordance to the GRI way of reporting, you might have a problem with getting, your report assured. Because one of the assurers asked me that. And for us, it is clear. I said it is clear for us that GRI is a GRI report if they follow the 9 standards. Now, if you set another way of assuring, then we cannot prevent you. But you cannot say that it is in accordance to GRI standards if a report doesn't follow all those 9 requirements.
Thank you, Dr. Ali. There is another question. We all know GRI reporting or ESG reporting is voluntary right now, but if a company were to report, is there any legal action on their reporting, especially on their data? If you can share an example or tell us what's the trend.
Okay, that question is very much layered, so I'll try to answer them one by one. GRI standards is voluntary, right? Because as I said, as a nonprofit organization, we have no police powers over anyone. But sustainability reporting is now mandated in a lot of jurisdictions. Here in Southeast Asia, 6 of the 10 ASEAN countries have some form of mandatory reporting, ESG reporting, but mainly for listed companies, because this reporting requirement comes either from the Securities and Exchange Commission or the exchanges, okay? So if you are from Vietnam, Philippines, Indonesia, Malaysia, Singapore, I'm missing one, Thailand, you are a listed company in any of these countries, you have no choice but to issue a sustainability report. If you don't issue a report and you're a listed company, each of these regulators would have some form of penalty. Now, you have to check it yourself with your regulators. In terms of data, Now, from what I know, each of these regulators don't do validation or verification. So if I'm from SGX, I don't go to your report and say, is this the number of hours you're training you reported for your employees? Is this for real? So they really have no way of validating it, right? Unless you have gone through an assurance, right? Now, I relate it now to the litigation risk of companies, because now in a lot of jurisdiction, the board of directors has been held. There are legal opinions that says that board of directors and the company, board of directors in particular, can be held personally liable for failing to address sustainability risk. Because as board of directors, boards have the duty of due diligence and care to the company, and that includes sustainability risks. So if it goes out that the board failed to address that and the company, went south, right, or went bankrupt because of that particular got into any problems, then they could be held liable for that. So because that would constitute as fraud, because you put out those data out there, and when you put out that report, there are people who rely on those reports as truth and make decisions out of it. And even investors, right? You could get into trouble with your investors because I'm an investor. I ask you for a sustainability report, and you said this is, accurate and true, right? And then I make a decision over it, and then turns out it's not true. Investors would have a legal ground to sue you, according to legal opinions. I think in Singapore they issued it, and even in Australia, and we've seen that happen in the Netherlands. The Dutch Shell company was also sued, and the judgment was held against them.
Will GRI be obsolete with the new TCFD framework?
That is a very good question, because we've heard that question many times, and I think this is an opportunity to break that myth. Okay, that is a myth, definitely. For one, as I said, GRI, we've been around for 25 years. GRI remains to be the most widely used impact reporting standard out there. So those thousands of companies that have already established systems and processes to do sustainability reporting cannot just stop reporting on GRI, because a lot of their stakeholders rely on that information. And now to differentiate TCFD and GRI, if you look at the, some of the earlier slides I showed, the difference between framework and standards. TCFD is a framework, and it's just focusing on climate-related financial disclosures. GRI is a much broader scale. We talk about standards, environmental, social, and governance. So the climate part is subsumed under the environmental topic standards that we have. Now, for regulators, I don't think regulators would hazard to tell companies from reporting in more detail, which is the GRI standards. They will just ask you to report on a broader scale, because the TCFD is a framework. They will just tell you their plans on addressing governance, risks, risks and opportunities, metrics. There are 5 categories to report on the framework, TCFD framework. But as I said, these are framework and these are broad. So if you're an investor, would it be better if companies report in more detail, meaning including the indicators, the performance indicators, and the metrics, rather than just a broad reporting on TCFD? Now, again, this is not either or. It is very much complementary.
Thank you, Dr. Eline, and thank you, Wanyan, as well. I think we will have to respond to the rest of the question via email. We are on top of the hour. Thank you to both speakers.
Thank you, Sirian. Thank you, everyone.
Thank you,
Thank
Wanyan.
you.
Thank you,
Yeah.
Dr. Eline.
Yeah.